Money day, guys and girls. Now I'm going to give you guys a quick breakdown on gold today, how, of course, we was able to execute successfully. Now, naturally speaking, when gold is ranging, we want to wait to see what it does after it's made the high. So when price came down, it stopped making higher highs. How do we know that? Because price closed beneath this low and it closed beneath this low here. So as soon as I saw on the 3 minute time frame, price is closing beneath the highs, I started to understand that there was going to be a shift in the direction of the markets. So, because of that, what did I do? Well, I very simply put myself in a position where I just sat on the sidelines and waited to see what would happen. So, as we play this out, what I want to show you guys is the fact that we didn't just buy because price pulled into this area. We was patient, okay? And what I done was I had a look on multiple time frames and I said to myself, hey, based on all of these time frames that we can see right now, where would I want to buy from? I realized on the hour candle, there was some imbalance down here. So I thought to myself, okay, cool. Right now, price is being really bullish. It looks like it wants to keep pushing higher, but I need price to pull back into an area first. So it pulled into this area. And once it done that, if you look on the 15, on the 10 minute, on the 6 minute, right down to the minute chart, okay, we can see that there was candles below, which I actually marked these candles out on the 3 minute time frame here. These candles were sell to buy candles, right? Sell to buy candles that I waited to see if price could play into. Now, as we play this out, what we saw happen was price played into the candle, then it pushed away. Now, one thing to pay attention to here once we're seeing price work in our direction is the fact that price closed above this high over here and then it played into it. Price is designed to always build structure. So even when price is making a new high, it's going to make an equal low or an equal high at some point because it always needs to make structure. So when you can understand that, you can actually start to be more patient in waiting for the next pullback because you should understand structure is always going to give you another entry. So this was the trade that was missed in today's setup, but that's fine because even though you missed this trade, there were still trades that we was able to get into. So I'm going to make it very quick for you guys. The trades that you lot were able to get into today was after we saw price was moving in this range. Some of you will know that price has a 70% chance of always returning to its range. Okay. So what happened was price was ranging higher. And there was a point where I thought to myself, maybe we could take out the high. So what I done was I marked out this last sell to buy candle over here. Okay. And I said to myself, cool, if price can touch this candle on the 3 minute chart, I'll look to execute. But as always, guys, nothing is ever perfect. So if I'm always looking for that perfect touch, that perfect move, sometimes I'm going to miss some of the greatest moves possible. So what happened was I waited. I sat on the sidelines because I thought price could keep pushing up after it returned into this range. It didn't. It pushed through the range, then it pushed back up. Now, when it pushed back up with this candle that it pushed back up with told me, okay, we're no longer respecting the highs. We've broken through these highs and we've closed beneath the highs. So now as prices pull back up, this is going to be an imbalance fill. So we took the trade. And of course, I sent out the trade for you guys. And the rest was history, right? We saw price push up into this area and then come down. Now, again, what you guys can see here is structure. Price is making a high, comes down, high, a high, then here's a low because we break beneath this higher low here. Then it makes the lower high. Then we come down to making a lower low. Okay. Price will push up here, lower high, and then hopefully come back down for a lower low. So the only thing that we're learning from this is understanding that even if you miss the first move, the second move might even be 10 times greater. There is always a possibility, guys, of you being more successful after sitting on the sidelines and waiting for the first trade to pass you by. Now, look, it goes without saying, these moves today was great. Yeah, all of these moves was great today. Okay. But the best move was this one because this one gave us over 1,000 pips, right? So there's a reward in being patient. There's always a reward in being patient, guys. Now, of course, naturally speaking, the later the time goes, maybe the more impatient you guys have become, or maybe the more trades you've got into where you've been unsuccessful. I know what it's like when receiving signals You might be someone, you know, receiving a trade. That instant satisfaction of you reaching TP might make you feel confident now to say, hey, let me place another trade. Okay, let me try this. Let me try that. Okay, I've looked at Vel's charts before. Let me try this. Let me try that. These are things you don't do. If you've got no experience trading, if you've got less than a year's experience in the markets properly, then don't risk trading your live capital with significant funds. Go down to a small lot size, go to 0.01. Don't put yourself in the position, guys, where you're getting away with murder because you're trying something which you think is going to work and it does end up working. Because what will happen is there will come a time where you think you know what's going to happen and you'll be completely wrong. And that could be the day that wipes out your account. That could be the day that wipes out all the profits that you've been working hard for the past however long. So my advice to you guys is follow these trades. These trades are not going to set you wrong. We're not giving you guys 2 pip, 5 pip trades. We're giving you guys significant trades that play out and give you guys life-changing results. Now, if you guys remember in the Discord, I sent the chart at the start, and the chart was pretty much me telling you guys, hey, what we wanted is we wanted price to come down and play into these areas. This was the promised land down here on the hour time frame. I'll show you. Down here was the promised land, but I also marked out this candle. Why did I mark this candle, you might ask? Well, this candle is an institutional candle. It's a sell to buy candle. It's the last candle before the upside move. So with it being the last candle before the upside move, it just means this is an area where the markets are buying from. So because I understand that, it means now when price is coming down, we don't jump onto the train saying, hey, it's going to keep on dropping because there's so much more room for it to go on the downside. No, we understand that there's going to be checkpoints. There's going to be points in the market where the market's going to find gaps to take a break, to consolidate, or maybe even to reverse. And those points are going to be our sell to buy candles or our buy to sell candles. I'm not saying we're going to get a reaction out of every buy to sell or sell to buy candle, but if you're aware of those candles, then it can help you be more precautious when maybe entering trades or even exiting trades. Some of you may have been in this sell, but they're not exited the trade because you didn't identify this candle to be of significant value. Therefore, you've allowed price to come all the way back up. You've allowed price to come back up 600 pips to now, hit you out of break even. And that's because you've got no real goal, no real end goal of understanding that not every trade can last forever, guys. Don't get me wrong. Some can have some really good swings, but right now, how volatile gold is, we shouldn't be putting ourselves in a position where we're holding trades without taking partials. So this video was just to break down my thought process behind these trades today and to give you guys some analysis, right? Price has come down, it's made a lows, closed beneath these lows on a 10 minutes. So what happens now as price is pushing back up? Well, as price is pushing back up, we can do 2 things. We can use a Fibonacci because we had a new low formed, and Fibonacci can show us that we're in an area to short, and we can also see that we've got some imbalance in this area here, right? This area here is the remaining imbalance area. Some of you guys would call it the fair value gap. So there's 2 reasons why we could potentially shorten this area. 3 reasons really: a break of structure, the Fibonacci, and the imbalance fill. Because of the time of day, I'm not going to be getting into no more trades. It's 1:41 in the morning here in Dubai. But my point is, guys, being patient pays. So if you've managed to get through this video successfully, well done. That is what it takes to be a successful trader. It's the patience. It's sitting down, it's listening to the advice, taking in the information, it's making notes. So let me know what you guys think, and I'll see you guys on the next one.